April is known as the most bullish month. May is known as sell in May and go away. For the June, you may be surprised on its seasonal trade. Hello everyone. In this video, I will be sharing on how I do my market analysis for each month. In summary, I will ask myself 3 questions when analyze the market. What is the current macroeconomic and fundamental trend? From the factstreet.com, 86% of S&P 500 companies exceeding EPS estimates, the highest percentage since year 2008. With this performance, I am confident that the market is still bullish. Inflation is still the hot topic, and the top sector that reporting the highest earning growth of all 11 sectors is consumer discretionary. Please refer to this video on the right top corner on my point of view on the macroeconomic analysis. My point of view is still the same. If we look on the Shiller PE ratio for the S&P 500, it is currently at the value of 37.37. The mean is 16.82. Thus, the stock does not look cheap at this moment. However, as I mentioned earlier, most of the S&P 500 companies still manage to produce a good earning and exceed the EPS estimates. In addition, not all stocks are traded at extremely high valuation. There are still many good stocks that are undervalued. Please refer to this video to look for a bargain. How about the seasonality? April is known as the most bullish month. May is known as sell in May and go away. For the June, you may be surprised on its seasonal trade. Extracted from the website Stock Analysis by Chris Gunners, June has a very flat monthly return from year 1980 to 2018. From the research done by Yardeni Research that includes more data, since year 1928, June performance is slightly positive of 0.8%. Overall, to me, the most significant months are April, the most bullish month, September, the most bearish month, and the November to December, generally bullish months. The rest, I will not take them too seriously. By the way, I'm Jay, and this channel is created to record my journal and provide insight how I plan to retire myself early in stock market. Please subscribe my channel if you would like to retire early from the stock market too. Please join our Telegram group in the description if you would like to engage with a group of like-minded investors too. Second, what is the current technical trend? First, look on SPX. For the stock market, please keep in mind that it will not move in a straight line. It is always in a wave pattern. Move out, move down, move out, move down. It is clearly showing that the current trend is higher high and higher low. The current trend is uptrend. I am bullish on the stock market. I will buy shares when the stock dips to the support. For the Nasdaq, it is also on an uptrend. However, the uptrend is much weaker as it fails to move past 4,200 that fail to bring a more obvious higher high pattern. It is quite consolidated for the last 4 months. Third question, where is the support and resistance? Using SPS as an example here, the moving average 50, the blue line, is a relative strong support. As on 2nd June 2021, MA50 is around 4,120. The current all-time high is 4,238. Similarly, using 2nd June 2021 as an example, the current price is 4,215. The percentage upside to the all-time high is 0.5%. However, the percentage downside to moving average 50 is 2.25%. Risk to reward ratio is 0.22. I am risking to lose $1 just for a 22 cents return. Not a good time to buy the share indeed. What is my game plan in June? Overall, I'm still bullish on the market. However, the current risk to reward ratio is not attractive to me. I will wait for the dip and buy more shares. Let us take a quick look on the sector analysis using FinVid. From 1 week and 1 month relative performance, consumer cyclical and healthcare are the weaker sectors. Thus, I will more focus on looking for the bargain between these sectors. If we further look on the 3-month relative performance, consumer cyclical is also the weaker sector. XLY is one of the ETF that tracks the consumer cyclical sector. It fails to move above moving average 50. Next potential buying point is MA 100. However, as the overall index is at high, I would rather wait for the dip in the index, and this may further dip the XLY to moving average 150 green line or even MA 200 red line. Then I definitely will look for bargains over there. This is a top XLY holdings. Similarly, we can analyze their fundamentals with the 5 simple steps that I have shown in the video before. Then determine their intrinsic value and we will know which stock to go with. For the healthcare sector, using XLV, the ETF that tracks healthcare sector, the daily chart is currently dips to SMA 40, the dotted blue line. As it is very near to MA 50, I will also wait for the index to dip. For healthcare sector, I will be focusing on TMO, Thermo Fisher Scientific, J&J, Johnson & Johnson, and UNH, United Healthcare. In addition, as the inflation is still the main hot topic and it will be the major macroeconomic trend, I will also focus on the stocks or the sectors that will be benefited during high inflation. I will prepare a video on this as soon as I can. Thus, if the index falls, I will be focusing on adding the stocks in XLY and XLV sectors. As this video is for general market analysis in June, I won't touch too much on the individual stocks for each sector. If you would like me to do a deeper analysis on the individual stocks between these two sectors, let me know in the comment section. Overall, here is my summary for the June market analysis. Macroeconomic trend, bullish. Fundamental trend, market is not cheap, but there are still bargains there. Technical trend, bullish. Sector analysis, XLV or the healthcare sector and XLY, consumer cyclical sectors are at the dips, giving a potential buying points over there. It is a good time to perform analysis on the stocks between these two sectors to look for a bargain. What is the stocks in your watch list in June? Let me know in the comment below. In my next video, I will do a quick update for all my holdings in MooMoo account. Before you go, please give me a like and see you in the next video.